This video was brought to you by the TLDR socials. Get more from TLDR by following us on Twitter and Instagram, where we post breaking news and explainers which never make it to YouTube. A couple of weeks ago we made a video about Evergrande, a Chinese real estate company, and since that video things have gotten even wilder for the company and, well, the country more generally. But before we get there, let's start with a little recap. The Chinese property market is pretty insane. Chinese property prices have been rising rapidly for the last 20 years. Today, in Shenzhen, the median house is 43 times the median salary. In Beijing, it's 42, in Shanghai, it's 33. For context, in London, where property is typically considered unaffordably expensive, the median house is just 13 times the median salary. Anyway, with prices rising so quickly, Chinese property developers have got busy building as many houses as possible. Lured by the promise of ever-rising house prices, a lot of Chinese developers borrowed a lot of money to build houses even quicker. Now, borrowing a lot of money works if house prices keep on going up, but the second that house prices slow, you're in trouble, because then you've got a lot of debt to pay off and not enough income. Nonetheless, this is what a lot of Chinese developers were doing because, well, house prices were indeed rising. Evergrande is the biggest of these debt-fueled developers. Evergrande is an absolutely huge company, employing some 200,000 staff directly and another 3.8 million contractors annually. Evergrande owns over 231 million square metres of land across China in 234 cities. For context, that's more than 4 Manhattans. Evergrande also has a lot of debt, about $300 billion in total. Most of this is owed to domestic investors, but about $21 billion is denominated in foreign currency and owed to foreign investors. Now, Evergrande has been in trouble for a while. For probably the last 10 years or so, Evergrande has been borrowing too much money. Essentially, Evergrande has been borrowing too much money, not being able to pay it back, and then borrowing more money to cover it. To try and improve cash flow, in 2019, Evergrande started relying heavily on pre-sales. Essentially, customers would pay for their house in advance, and Evergrande would promise them a house later down the line. This temporarily gave Evergrande more cash, but also means that they now owe a whole load of people new houses. Anyway, things really started to come to a head recently when two things happened. First, house price sales slowed in China. This means that Evergrande's cash flow dried up, and investors got worried it couldn't pay back its debts. Second, the CCP imposed its so-called 3 red lines. Now, the 3 red lines were a bit complicated and economic-y, but to understand the Evergrande story, you need to know 2 things about them. 1, they were intended to reduce the amount of debt that companies were taking on, because the CCP have been worried for a while now that big Chinese companies have been taking on dangerous amounts of debt. Second, Evergrande was on the wrong side of all 3 of them. This means that Evergrande has to cut down on its debt habits, but because it relies on more debt to pay off existing debts, this won't be easy. Anyway, all this spooked investors and basically meant that Evergrande's borrowing costs went sky high because no one wanted to loan Evergrande any more money. This meant serious trouble for Evergrande because, as we explained earlier, they need more debt to pay off their current debt. On September the 23rd, Evergrande failed to pay an $84 million bond interest payment owed to offshore investors. Evergrande's woes have since spread out into the wider Chinese economy. This is for 2 reasons. First, Evergrande is so big that it's connected to, well, basically the whole Chinese property market. And second, when investor confidence drops, it usually drops across the board, especially when it involves something like China's property market, which looks like a bubble waiting to burst. 2 other property developers have seen their borrowing costs increase to the point where they can't pay off their current debts. Contagion, a mid-sized developer, missed a $206 million bond payment on Monday, and Cynic, another developer, missed a bond interest payment and was subsequently downgraded by Fitch, the credit rating agency. This is why, on Monday, with Evergrande stock down 80% from 6 months ago, when Evergrande suspended trading, a whole load of other companies stopped trading just at the same time, which suggests that the stress has now spread beyond Evergrande. Evergrande's official reason for suspending trade was a possible general offer for its shares. In their statement, Evergrande didn't actually mention who their potential buyer was, but there were rumours that Hobson Development, a rival Hong Kong listed property company, was set to buy a 51% stake in Evergrande's real estate arm for about $5 billion. While this is enough to pay back some immediate debts, Evergrande has some $7.4 billion worth of bonds maturing next year, so it'll need to find even more money to sort it out. Furthermore, this is unlikely to stem the wider confidence in the Chinese property market, as investors get more and more worried. So the big question is why the CCP haven't stepped in to save Evergrande, given that the crisis seems to be spreading throughout Chinese property markets. This is probably for two reasons. First, the CCP is genuinely worried about debt levels in China, which are remarkably high by historic standards. If they bail out Evergrande, the poster boy for excessive debts, this doesn't really send the right message to the market. Second, the CCP are rightly worried about China's ridiculous property market. Because houses in China are so expensive, Chinese people have to spend most of their money in property. This means they've got less to spend elsewhere, which isn't ideal because it means that other sectors of the economy receive less investment. It's possible that the CCP think that a property market crash is worth it if it means an appropriate reallocation of capital. And to be honest, this is something that Western governments are going to have to deal with eventually. Basically, every developed country is suffering a housing crisis, but elected politicians are terrified of any fall in property prices, because if there's one way to annoy the electorate, it's wiping out the value of their largest asset. Nonetheless, exorbitant housing prices just aren't good for the wider economy, so Western governments will have to make some hard choices at some point in the future. Anyway, the real question is whether the CCP can lower debt without triggering a full-blown financial crisis, and given that the stress is now spreading to the wider market, this isn't going to be easy. What do you think though? What's going to happen next, and what can and should the CCP do to mitigate these issues? Let us know your thoughts in the comments below. Like I said at the start, you can get more from TLDR Global on Instagram and Twitter. Find these accounts linked below or search for TLDR to find the TLDR Global, UK, US and EU accounts. Thanks for your support. Also, be sure to subscribe to the channel and hit the bell icon to be notified every time we release a new video. Special thanks to our Patreon backers who make videos like this one possible. If you want to see your name at the end of videos, then sign up by clicking the link below.